The AI chip industry is buzzing with news. Huawei, the Chinese tech giant, is developing its own AI chip. This chip is designed to rival Nvidia's powerful H100. The news sent shockwaves through the industry. Nvidia's stock dropped over 2% following the announcement. Investors are clearly concerned about the potential disruption. Huawei's move signals a new era of competition in the AI chip market. The stakes are high. AI chips are essential for powering the next generation of computing. They are used in everything from self-driving cars to drug discovery. Nvidia has been the dominant player in this market for years. Its GPUs are renowned for their processing power and efficiency. However, Huawei's entry into the market could change the game. The Chinese company has a history of innovation and a vast domestic market to tap into. Huawei's chip development is still in its early stages. It is unclear when the chip will be ready for mass production. However, the mere threat of competition is already having an impact. Nvidia is facing pressure to innovate and maintain its technological edge. The company is also facing challenges in China. The US government has imposed restrictions on the sale of advanced chips to Chinese companies. This has made it difficult for Nvidia to sell its H100 chip in China. The battle for AI chip supremacy is just beginning. It is a battle that will have major implications for the future of technology. The outcome of this battle will depend on a number of factors. These factors include technological innovation, government policy, and market demand. One thing is for sure, the AI chip industry is in for a period of intense competition and rapid change. Nvidia's dominance in the AI chip market is facing a significant challenge in China. The US government's restrictions on selling advanced chips to Chinese companies have created a major hurdle for Nvidia. The company's H100 chip, a powerhouse in AI processing, is effectively banned from the Chinese market. This ban has forced Nvidia to reassess its strategy and look for growth opportunities elsewhere. The impact on Nvidia's business in China is undeniable. China has been a lucrative market for the company with strong demand for its high-performance computing products. The loss of this market share represents a significant blow. Nvidia is now facing pressure to offset these losses by focusing on other regions. The company is shifting its attention to the US and European markets, where demand for AI chips remains robust. This setback in China marks a turning point for Nvidia. It highlights the geopolitical realities of the tech industry. Governments are increasingly playing a role in shaping the global technology landscape. Companies like Nvidia must navigate these complexities to remain competitive. The company's ability to adapt to these changing circumstances will determine its long-term success. Nvidia is not alone in facing these challenges. Other US tech companies are also grappling with the implications of US-China tensions. The semiconductor industry, in particular, is caught in the crossfire. This situation underscores the need for a more predictable and stable global trade environment. Brian Klo, a renowned industry analyst, offers valuable insights into Nvidia's current situation and future prospects. Klo believes that the ban on the H100 chip effectively ends Nvidia's dominance in the Chinese market for advanced AI products. He predicts that Huawei's chip will likely surpass what Nvidia can currently offer in China due to the restrictions. Despite the setback in China, Klo remains optimistic about Nvidia's future. He points to the company's strong position in the US and European markets. Demand for Nvidia's Grace Blackwell chips from hyperscalers like Google and Microsoft remains high. These companies are investing heavily in AI infrastructure to support their growing cloud computing businesses. Klo believes that Nvidia's strategic shift towards the US and European markets is a necessary and ultimately beneficial move. This shift allows the company to focus on regions with fewer trade restrictions and a strong appetite for AI technology. He expects Nvidia to continue innovating and developing cutting-edge products to meet the evolving demands of these markets. Klo acknowledges the challenges ahead for Nvidia. The competition in the AI chip market is intensifying, with companies like Intel and AMD vying for market share. However, he believes that Nvidia's strong track record of innovation, combined with its strategic partnerships and market leadership, positions it well for continued success. Nvidia's recent announcement of a $5.5 billion write-off related to its China business has sent ripples through the financial markets. This write-off reflects the significant impact of the US government's chip restrictions. It represents a substantial financial hit for the company. Investors are now carefully analyzing the implications of this write-off for Nvidia's future earnings and growth prospects. The write-off primarily covers unsold inventory and anticipated losses from future sales in China. It highlights the difficulty of navigating geopolitical uncertainties. The situation serves as a stark reminder of the potential financial risks associated with operating in a globalized economy. Despite the significant write-off, analysts are divided on its long-term impact. Some believe it is a one-time event that has already been factored into Nvidia's stock price. Others remain cautious, arguing that it could signal deeper challenges for the company's growth trajectory. Nvidia is expected to provide more details about the write-off and its future plans in its upcoming earnings call. Investors will be listening closely for any indications of how the company plans to mitigate the impact of the China restrictions and capitalize on growth opportunities in other markets. Section 5. The bull case for Nvidia, U.S. hyperscalers fuel growth. Despite the challenges in China, there is a compelling bull case for Nvidia's future. At the heart of this optimism is the insatiable demand for AI chips from U.S. hyperscalers. Companies like Google, Microsoft, and Amazon are pouring billions of dollars into building out their AI infrastructure. This investment is driven by the explosive growth of data and the increasing demand for AI-powered services. Nvidia is uniquely positioned to benefit from this trend. Its GPUs are the industry standard for AI training and inference. These chips offer the processing power and efficiency required to handle massive data sets and complex AI models. As hyperscalers continue to invest in AI, Nvidia is poised to reap the rewards. Moreover, Nvidia is not solely reliant on the hyperscaler market. The company is also making inroads in other sectors such as automotive, healthcare, and finance. The demand for AI solutions is growing rapidly across various industries. This diversification provides Nvidia with a buffer against potential downturns in any single market. The bull case for Nvidia rests on the belief that AI is still in its early stages of adoption. As AI technology matures and becomes more pervasive, the demand for Nvidia's chips is only expected to grow. This long-term growth potential makes Nvidia an attractive investment opportunity for those willing to weather the current geopolitical storms.